So you trade supply and demand, but you struggle to find those best zones. You tend to find the zones you mark, you end up having losing trades. So let's go through that today and let me help you to find those best supply and demand zones to trade from. So on the Euro USD pair on a daily time frame, first let's go through the structure of understanding how to find those best zones to look to trade from. So let's say we're in a bullish market. We're seeing the market coming down. Okay, we create a reversal and we're making a bullish market to the upside. When we're looking for those best zones to be trading from, we're looking for the origin. Okay, so the origin move where we see the low point where the market continues higher. They are always going to be the best zones to trade from. They are the zones you want to be marking on your charts. Now, I will show you what I mean when we go to live price chart, but we're looking for the last sell to buy move for the area of demand, or the last buy to sell move for the area of supply. It's as simple as that. And once you find these zones, they're going to be the most highest probability areas to trade from. They're going to be the highest area within that swing pullback where you want to be taking a trade. So understanding this information, this would be your swing pullback. Okay. Let's bring this one down. New area of demand. Again, here, this would have been your swing pullback. Let's mark it out as well. And okay, so let's say it's the area of demand. So this is how the demand sequence would work. And you would see the market creating higher lows in areas of demand, breaking structure each time. Now you're going to see this much easier on a price chart, but that is the basic form when looking for the best zones to trade from. Let's remove all that. So let's go to a price chart and we'll start from here going to current price so you can see exactly how we look at marking the zones. Now there's two ways we can look at marking zones. One is that swing structure, another one is our internal structure of that swing. Let's first look at the swing structure, how we look at marking the zones. So let's say we have the market creating this last push here to the upside. Okay. Now you can see where we have this break of structure here. Okay, I'm going to leave this here for now. Where is the best place to mark the area of demand? Now we just went through that structure, okay, to show you the best place to mark out these areas of demand. This would be your last sell to buy move. So this would be an area of demand that I would draw out. Okay, that's the zone that you want to have on your chart. The last sell to buy. Okay. Now, if this was a bearish candle here as well, this would be the full zone. Now, I'm not saying you're going to mark that on your chart, but you're going to have it at the back of your mind that if price comes here, okay, we could see a reversal out, understanding the internal structure of that swing. But this is in fact our last area of a sell to buy move. So that is our origin area of demand. So let's now just go back. Okay. Now you can see price does come into that zone. Now I know this is in hindsight, but this is the best way for you to understand how to apply this. So let's now go back and look at this full swing. We have the market pulling back. We push back up again, break structure, pull back, and we break structure again, and eventually we actually reverse. So once again, let's go closer into the market. When we see this breakout here to the upside, where is your last sell to buy? Well, here's your last sell to buy move. That became your area of demand. You see price comes in, okay, and reverses out. Once again, we see this push up from this origin move. Okay, where's your last sell to buy? Well, this is our last low in the market. Okay, like we have this low here. This is my last sell to buy move. Now we in fact have a reversal here that you're most probably going to find a good entry in a lower time frame, and you could have caught all that move up. But understanding this is the origin zone, we see the market comes down, we have a bounce, and then we have a straight close through. Now you're going to find that you will lose every time the market makes a full reversal. There's just no way of knowing for sure that this area is going to hold. We expect it to hold, and there's no reason you can't be trading this on the way down the lower time frames for profit within that swing. But when we come here, the likelihood the market's going to reverse and go back up is much more higher probability of this higher time frame than would be if we was trading, let's say, a 1 hour time frame trend here to downside. The 1 hour is not going to remove the daily area. Just remember that. So that's how you'll be looking at those areas here at the upside. Now let's look at these last two swings, okay? We have an area here of demand. Here's price held and we push back up. We have another area here of demand as well, okay? And the market pushed straight through. Again, it's a reversal and we have internal structure here. But my point is, if you was looking at trading this, you would not want to be trading off these zones because these are not the best zones to be trading from. The origin is the best zone. Always have in the back of your mind that where's the swing formed, okay? This is where the swing formed. This is where the move went up. Again, here, this is where swing formed. If you're looking to mark off all of these moves here as areas to look to trade here from, that is not going to work and you're going to have losing trades after losing trade. Stick with the one zone on that time frame. Forget all these, okay, to trade from when you see the pullback, especially once we've broken through those highs. On the way up, okay, yeah, on the way up, we can look to trade these zones. Continuation until we remove that high. That's fine. But when you see this pullback here, we're not trading off this zone here. Okay, we're trading off this one only. Just keep that in mind. So that's how we look at this swing structure, okay? So let's now actually take a look at this area of price. But before we do that, for the internal structure side, let me just do a sketch for you first. So let's say we have the market now in a bullish trend and we come back down into this area of demand and we see the market doing this. This is then where we can see the internal structure, okay, heading back up to eventually remove this high. That's what we're potentially looking for. So we have our higher time frame area of demand here. And then we break structure back to the upside. You're looking for your origin zones. Again, just like we saw in the swing pullback, you're looking for those internal swing pullbacks. Continue with the areas of demand. And again, you're looking for the last sell to buy move on each of those areas. That is all we're seeing here at the moment. Now, the only difference is this isn't coming off a bullish area of demand. It's just a retracement. You can still trade these the same way, but it's going to be much, much more risky unless you understand what the market is actually doing. So right here, let's look at this. Let's remove this. I'm just going to draw in the actual areas of demand so you can see this with demand and supply. So last area of supply is here. Our supply gets removed. We have, okay, this is actually our last sell, okay, there. Our last sell to buy move, but we refine that to that last area down here. And we can see the market, once we broke this supply, we came back to demand. Now, whenever we see these sort of reversals, we want to be looking for the next structure ready. So where we see again, the sell, okay, to buy move, we come back in this demand zone. We're going to refine that once again now to here. But what you need to remember is that the market could reverse off this area. And what is that actually going to be? That would be our area of a previous area of resistance structure in the market coming back to act as an area of support. When we pull back into this area of demand again, okay, we have another break of structure. Our last sell to buy move is in fact this full move here. And that's why we see the market coming back and will react and continue high. Now, if we refine that, it would be here. But you have to have in the back of your mind a previous area of resistance could become support, which is a structure shift reversal. That's why we look at the last sell to buy move of an area of supply and demand. Again, our last area here is this move here, our last sell to buy move. And again, we can do the same thing, our last area of here. Again, I'm going to mark it off from the low. I'm not actually going to mark it like this, I'm going to mark it off from the low. And again, this would be your full area, last down move. So again, you could look at this as a previous structure break, retest continuation. Now, again, we'd always look to refine it, because really we want to be looking for a trade to come off this zone here. So the deeper the pullback, the better, all depending on the size of the swing as well. But just bear in mind that these levels can have price react at them. So that is how you look at that reversal. That's just what we went through on that diagram. So if we were looking at like as a structure point of view, this is your structure. And this is how quickly that you can identify structure in the market. You don't need to make this complicated, okay? Use this simple structure technique I'm showing you in this video with the best supply and demand zones to trade from, and you will do absolutely fine.